we are joined by Lucia van Geuns, if I have pronounced that correctly, from the Hague Center for Strategic Studies. Welcome.
Thank you.
Now, Emma, what is the topic that we will be hearing about today?
So the topic of this first segment is that of geopolitical challenges shaping the trends within the project cargo supply chains. So what can you tell us about that today?
Okay, well, I'm going to give a presentation. Is that okay if I start that off?
Absolutely.
Yes.
Great. Okay, so I actually give the title Geopolitical Challenges in Energy because that's what this is all about. So the agenda for today, for the next 20 minutes, will be about the global energy context, about the current crisis, and about this new geopolitical landscape, which I would like to sketch, given the current situation. But first of all, I'd like to zoom out and look at energy transition in general. And actually, one can say that for energy transition, no one size fits all. There will be various speeds of change, depending on where you are in the world. It will take time, and it is also very unpredictable. We know that wind and solar energy are growing rapidly, but the world's reliance on fossil fuels isn't changing anytime soon. And of course, if we look back now, say, at May 2021, there was this specific report which was being issued by the International Energy Agency. It was the Net Zero by 2050, a roadmap for the global energy sector. This was what we call a backcasting scenario. In other words, we want to be net zero in 2050, but how do we get there? And if you read that report, it is a very optimistic report. And actually, it also says that in order to achieve that net zero emission by 2050, a complete transformation of the global energy system should happen. And actually, it says, if you look at the conclusions, that the path to net zero emissions is very narrow, that we need to drive huge leaps in clean energy innovation. There should be a rapid shift away from fossil fuels. Electricity, yes, will be the core of the energy system. And of course, new low energy emission industries will flourish. So there will be a lot of, if you like, opportunities for new energy technologies to actually become widespread. And then this last bullet, very important, and that's actually where I put a lot of question marks. It will be a clean energy world where solar will be the single largest source of supply. And there will also be close cooperation between businesses, investors, and also citizens. And above all, there should be a greater international cooperation among countries. We know we are not there yet. I mean, we actually are moving away from this closer international cooperation. And let me try to explain that in a little bit more detail. Of course, in October, November, there was the COP26, so the climate conference where all the big leaders actually came together, mainly online. And actually they said, listen, we have a couple of pledges we would like to make in order to reduce our emissions. And the big emitters like China, the US and the EU, of course, with the Green Deal, clearly showed that they are willing and they want to reduce their emissions. For China, more than 65%, but then in 2060, and of course for Europe, more than 60% by 2050, and actually more than 55% definitely by 2030, and then eventually net zero by 2050. Also, the US has very ambitious plans, and even Russia at that time came sort of very late in the day with some plans to eventually reduce their emissions and to decarbonize their economy. Of course, we know that energy in an energy policy, in the end of the day, needs to have a balance between a secure energy system, a sustainable energy system, and an affordable energy system. That's where actually energy policy is all about. We also know that in the last, if you like, 10 years, especially in Europe, the emphasis on sustainability has been very, very high. Affordability, it was always affordable. Energy, especially oil, gas, but also electricity, was not that expensive. With oil, there were some ups and downs, but all in all, gas and especially electricity was always there and not too expensive. We know we now live in a different world, especially also with security. Security was maybe a little bit be left at the back rather than now being at the forefront. If we go back again last year, and then the World Energy Outlook, which has been presented by the International Energy Agency, you see that there are uncertainties with respect to oil and gas demand trajectories. A lot of emphasis is being put on oil and gas trajectories, especially demand. Will there be a peak demand for oil? Will there be a peak demand for gas? And especially when? These particular slides, these particular graphs are a little bit complicated, but the most important message here is that if you follow the pledges which have been made in Glasgow last year, or you follow the net zero carbon trajectory given in the net zero pathway from the International Energy Agency, then yes, both for oil and for gas, there will be far less demand by 2050. However, the path we are currently on is, and in fact that is the new policy path, you will see that there is still a lot of new investment needed with respect to oil and gas, especially towards 2030. So there are dramatic different implications for investments. A strong policy push to reduce oil and gas demand is key to minimize the risk of market tightening, because that, of course, is then the result. And there has been another graph shown in that same World Energy Outlook, and that's the looming risk of more turbulence for energy markets. Here you see two graphs. One is the investment made towards 2050 or projected towards 2050 as far as oil and gas production investment is concerned, and a projection with respect to energy and infrastructural investment towards a cleaner, decarbonized net zero scenario. And you see that actually for oil and gas, you see that we more or less are on that line. However, as far as net zero is concerned, we still have to invest quite a bit. Oil and gas investment is geared to a world stagnant and falling demand. We know we're not there yet. So the transition-related spending is not rising or nearly not fast enough when you talk about net zero carbon. So if you then try to summarize that, actually towards 2030 especially, the transition is not straightforward. If we look at the world in terms of supply and demand and also pricing fundamentals, you can see four major issues. One is the supply deficit. You see a steep drop in capital expenditure as far as oil and gas is concerned, and that in the end of the day will change the supply-demand equation. You see a supplier imbalance. Most likely OPEC will be very dominant towards 2050. Now it has a market share of around 37%, and it will be over 50% by 2050. And the oil price volatility and energy security risk, which we are currently having, will actually continue to definitely 2030. And then the ESG focus, so the environment, social and governance focus as far as the financial world is concerned. You see the ability of oil and gas companies to source capital is a growing issue. And then, of course, the whole decarbonization responsibility. We are all aware of the court rulings and the shareholder activisms to include especially Scope 3 emissions. Remember, Scope 1 and 2 is the emissions of the companies themselves and their service companies, while Scope 3 is actually the emissions from the consumer. And actually a lot of companies these days are being held responsible for eventually also the Scope 3 emissions. So if you then look at the traditional risks and the new vulnerabilities, you can see as far as trade is concerned a shift, especially when you follow the net zero scenario. Now we have an international energy-related trade which is very much dominated by oil, and then, of course, also natural gas, coal, but also critical minerals, which are playing an important role. If you look at the announced pledges scenario, so the pledges which have been announced in Glasgow in 2050 or in 2030 and 50, then you will see that eventually that trade will be more or less in the amount about the same. Oil still plays a very important role. Critical minerals, a more important role, especially because they play such an important role in the new energy technologies. Hydrogen is going to be part of that particular trading game, and natural gas and coal, to a lesser extent, also playing a role. However, if you look at 2050 in the net zero scenario, then you'll see that actually oil is going to play a far less important role. Critical minerals, very important, and hydrogen as well, and look at the percentages. So in the announced pledges, you see a growing share of oil and natural gas towards developing Asia, Critical minerals and hydrogen-based fuels are on the rise, actually in all scenarios. But then the world has changed. This was 2021, November 2021, the slides I showed up to now, and then, actually a new age of energy and security occurred. And that occurred, obviously, with the war started by Russia in Ukraine. You see that there is a new power play going on. You see a roller coaster oil market, with highest oil prices seen since 2014, now a bit relaxing again, everything to do with China, but that obviously is escalating by the situation in Ukraine. You see a perfect storm as far as global gas markets is concerned, and prices which have spiked, especially in August, to record highs. And you see volatility also in the power markets. Actually, it's also an electricity crisis and not only a gas crisis. And that has to do with renewables, who try to find its market share, and governments who step up their policies as far as decarbonization is concerned. And that, in the end of the day, should also boost energy security and cut emissions. But what we see is that the world energy industry is about to be transformed, but energy insecurity is likely to be here to stay. And then, of course, the European Union came with their E-Power EU plan to at least reduce the dependency on Russian gas, 66% this year. This was, of course, announced in May 2022. We now know that there is already far less gas being exported from Russia into Europe. So if we just look back, we imported around 150 BCM of gas to Europe in 2021. That has now reduced to only 9% of what it was. And replacing it is difficult. We see that now, and it creates a boom for LNG producers. All in all, for the next winter, but also for the winter to come in 2023 and 2024, will there be enough LNG around to meet demand? On the short term, this will make for a hard winter in Europe. And this is a quote given by Rystad Energy in May 2022. The stage is set for a sustained supply deficit, high prices, extreme volatility, bullish markets, and heightened LNG geopolitics. Well, let me elaborate on that a little bit. If you look at what happened lately, is that the US LNG export is now has overtaken the amount which is being imported by Russia from gas pipelines. So Russia's recent steep cuts in natural gas flows to the EU mean that this is the first month in history, and this is July 2022, in which the EU has imported more gas via LNG from the US than via pipelines from Russia. And you see the graph actually showing this given by the International Energy Agency. And of course, in the Netherlands, we also have done quite a bit in order to make at least sure that this winter we will have enough gas to heat our houses and to actually keep our industry going. For instance, we have Gasunie has hired or leased large floating LNG installations, and they now have been installed in the Eemshaven, and that in the end of the day will give at least 8 BCM extra natural gas, or at least it can store 8 BCM extra natural gas. Also, the Gate terminal in the Maasvlakte in Rotterdam will extend their storage and their facilities, and eventually to 16 BCM a year. So that's in a way the good news. But let's now try to summarize the Russian invasion of Ukraine, and then first let's look at the natural gas markets. It has redefined the global natural gas market. It really became a global natural gas market, given that LNG becomes so important. The high price and the tight supply that built up in the second half of 2021 was further intensified, because don't forget, the high prices were already there last year at this time. And they were intensified after the invasion, leading to fuel switching, for instance, from gas to oil, but also, of course, from gas to coal, and demand destruction. We obviously are more efficient now with gas, but also we have to be efficient more in gas when you look at industries who have to switch off or eventually reduce their use of gas. In the EU, you see that they are, with all their policies, try to phase out Russian imports, And that transforms the European gas market as well, with implications for the whole global dynamics. At the moment, because Europe is paying most for their gas, it actually a lot of LNG is bypassing other countries like Pakistan, like Bangladesh, because in Europe they pay the highest price. That's how the global gas dynamics currently works. And there is even a possibility that Russia will unilaterally further restrict its export flows, not only by pipeline, which is now mainly the South Stream, but also through Ukraine, but maybe also LNG, which is still exports. So if you then look at the global oil market, very important as well, especially with the upcoming European boycott. Remember, there is already a boycott on Russian maritime oil for the US and for the UK, and in the EU it will be in December for crude oil and in February next year for oil products. So the extent of the disruption to Russian production has so far been limited because they find all kinds of ways around it and eventually even try to sell their gas with a discount to, for instance, India, but also China. But this will change rapidly, especially now that the EU is going to sanction Russian oil imports at the end of the year. That will create even more uncertainty and price volatility. And also what you see now, there are new patterns of trade flows in the crude oil and products. For instance, Russian crude oil will go more to the east, as I said, India, China, but also the Middle East. That is then being converted often to oil products that in the end of the day find its way back even here to Europe, especially when you talk about diesel. And we know with diesel we already have a problem in Europe, and that already is being translated in the price of diesel. Also, you see new trade practices, and that will, in my view, only become even bigger when the actual sanction on Russian oil, especially maritime oil, will be implemented. For instance, blending, both at sea, but also maybe in harbors, ship-to-ship transfers, and there will be a segmented market, which means products of Russian origin versus products of non-Russian origin. All in all, we see that the oil price currently is not that high, although it's still relatively high, $85 yesterday per barrel. But all in all, the boycott has not been implemented yet. When we then look at sort of the historical context, and we know that geopolitics is now center stage again. And if you look at the last G7 gathering in Scotland, I think it was, you see that actually we all recognize that this is the end of 30 years periods after the Iron Curtain collapse. So it was in München now, all of a sudden, remember, in Bayern. Most likely it is the end of a time of open markets and globalization. It will be a world which is back to a more divided world. The Western world slammed, in fact, the door on Russia, and it probably will take some time before that opens again. And the whole World Trade Organization consensus world is maybe over now, and we are now in an era of great power competition and strategic working together, collaboration. So will this be the start of a world of fragmentation? What we know is that the US is the new energy power. The US is now a big net exporter of energy, while China remains heavily dependent on imports. It's the larger producer of oil today, it's the larger overall producer of gas, and it's the larger exporter of LNG. So you see that shale technology and LNG is a strategic asset for the US. So in fact, you can say that we are living we're going towards a new energy order. Especially the European energy markets are looking for a new normal. You see diversification of energy sources, acceleration of renewable energy sources, and concerns about energy security. But the transition can be long and it can be very bumpy. The reality is we are still very dependent on hydrocarbons. And all in all, our policies are not strong enough in order to accelerate the decarbonization. Energy security remains at the heart of energy policy, and it is coming at a cost, and it can derail other objectives. So all in all, transition to a new energy order will not be smooth and orderly, as friction between the major players of the world stage increase. And then I can only talk about the US and China, Russia and the West, and of course the slowing down of the globalization. Well, let me end up by giving this volatility ahead. Will it be orderly or disorderly? All in all, we can say that we have to look towards 2030, and we have to look at the process towards 2030. That's far more interesting than the end state, which is needed, like 50 or 55. You see that OPEC countries, they are balancing the volatility in the markets more than less. Hence, OPEC countries more important. The LNG dependency on the European gas market is going to be very, very important and at center stage. It's very early days for hydrogen yet, or green ammonia markets, because they're not yet liquid markets. Buyers are more vulnerable to disruption. And you see that there will be a critical mineral market emerging, of course, everything to do with the new energy technologies. Affordability, reliability, security of supply, national security come into conflict. Will it be real or perceived? With climate ambitions, will they wane? All in all, market and policy tools, they are there to de-risk the energy transition. Well, in order to round off, do I still have time for one slide?
Yes, please.
Okay, well, let me then just use this one slide in order to eventually sketch this new geopolitical landscape. You see, if you look even further towards 2050, that power politics in countries with critical minerals and low-cost hydrogen production, they will emerge. And that will be different countries than there are today. It will be mainly China when you talk about critical minerals. The development of a new geopolitical landscape is uncertainty, and the speed and success of energy transition relies therefore on policy choices, international relations, technological breakthroughs, and infrastructural development. All in all, collaboration and cooperation, in our view, is the, if you like, at the heart of success eventually, and will be part of the solution. Also, infrastructure and market development is required simultaneously in order to speed up the change. Thank you very much.
Thank you for the presentation. I just have one question quickly before we let you go. Could Africa and African resources play a hand in securing supply, let's say, of LNG to Europe?
Yeah, well, currently it's mainly Nigeria, and of course there is an emerging LNG country, which is then Mozambique, but that's not for the next year or the year to come. There's even more delay as far as LNG coming from Mozambique. So yes, but then of course if you take Africa, also Egypt into account, Algeria already plays a role, very important role. Egypt upcoming, and maybe even the whole Eastern Mediterranean is a potential, large gas province. But of course, it still has to be developed still.
Good. Thank you. Thank you very much for the insightful presentation.